Okay, good afternoon, ladies and gentlemen, and welcome to today's live Friday webinar. My name is Emmanuel Akinola, market analyst at HFM Nigeria. How's everybody doing today? Welcome to you and to everyone who is currently on this particular live. Thank you for joining. Today's topic is an interesting one, and I believe we will be here for, the next at least 55 minutes, talking about this really key concept in this particular business that you would require your utmost attention and would also be of good use to you when it comes to trading the global financial market. And the topic today is trading reversals, paying attention to how tools like the RSI and even tools like the MACD could potentially help us or offer us potential, opportunities in that particular regard. All right. So one of the major things that we're going to be doing today is examining the concept of reversals in the market. And it is important for us to note that the most, you know, common thing with traders around the world is direct approach, right? Everybody wants a direct approach to things. Everybody wants to you know, eventually just get who can sinker direction from us and just let us hear say, oh, do it this way or do it that way. That's what you want to hear. And I'm not that type of person. I'm not just going to be here just talking about how, okay, just go ahead and press buy, just go ahead and press sell. Or once you see a reversal, just go ahead and take it. I mean, the big question that we always have and we always ask ourselves is, how do we even see reversals coming before it even happens? Like, how do I know that this particular move is going to get reversed? Or how do I know that reversal is forthcoming in the market? It's a big question. Because how do you tell? How do you tell when there's going to be a reversal? How do you know if the market is going to reverse a move, as the case may be? And before we even get talking about how to know or how potentially we could, debate what potentially could push prices, up for reversal, we must also understand that in in the case of the market, you must even define what you mean by a price reversal. Honestly, you must define what you mean by a price reversal. Because there are multiple types of price reversals in the market. That's one thing I know. So we have to define what we mean by a price reversal. And what am I talking about here? I'm talking about the case where, a small move this way, maybe a small move happened like this, prices went up and then prices returned back, and you say, okay, and you say, oh, this was a reversal. Are you talking about this? Or are you talking about a big move and then expecting that, the price completely takes it back? Or are you talking about, even moves that could easily be called retracement, and you mistake it for a reversal? So we have to be clear about what this concept of reversal is really all about. And it is really a dicey topic for me. But yes, I'm going to try my best to explain to a greater extent how to see reversals coming in the market. And you see, one of the major things that I would need you to note, especially in this business, is what do you think can potentially cause a price reversal, or what do you think potentially could give birth to reversals, or what do you think could potentially influence reversals in the market? And one of the biggest questions, or one of the biggest things that I think you should note in this particular regard is simple. Why should price reverse? Is it because you want it to reverse? Is it because you think it's going to reverse? Is it because you saw probably a technical pattern on the screen, hence making it look like you might see, a reversal in the market? You must be able to defend why you think there would be a reversal and why you also even think you should be trading, that particular direction. And one thing I can tell you is this. For me as a trader, before I even start thinking about reversal, I need to first understand what is going on with the asset in question. Now, I start with understanding what is going on with this particular asset in question. What's going on with this particular guy? Is everything what is driving this particular asset? What is the catalyst moving this particular asset either to the top or pushing it lower? It is when I understand that I then think about if there could be potential changes in that particular direction. Listen to this. One of the most important things that I think about, and I've always talked about this, is the concept of pricing and repricing. This is the most important thing that gives birth to reversals in the market. Like the most important concept for me in terms of reversals. This is what it is. The most important concept in terms of reversals for me is really the concept of pricing and repricing. And what do I mean by pricing and repricing? It simply means if something happens for one cause, there's also likelihood that a change in course can cause a reversal. For example, if the market is buying, dollar because of the expectation of a strong US economy, and we bought dollar, for a while, and then we start to see economic data point, pointing to a weak US economy, we take it back. That's pricing and repricing. Or, for example, the market starts to trade, a weak euro, in the prospect of maybe geopolitical tension in the euro area, or maybe even with, in recent times, we've seen issues with German election, France, and all of that. So the market started trading the euro as a weak currency based on political uncertainty within the region. By the time the uncertainty dies off, or by the time the issues are resolved, what do you think is going to happen? The market is going to reprice the move. Why? Because the move was justified by a particular thing, political instability. And when that is out of the window, you take it back. It's the concept of the market. You price a move, and if that is out of the window, you reprice it. That's it. Or we trade, maybe for example, we trade a stronger yen. Maybe we've been reading some things, we've been reading information in the market, and the information in the market is suggesting that the BOJ is going to potentially, hike interest rates, in days to come, or maybe even weeks or months to come. Maybe the policy guidance according to the BOJ members is for an increase in interest rate, and then we hear that and we feel like, oh good, this means we can trade a stronger yen. We start buying the yen against other currency, and then the time comes, or closer to the time where we are supposed to see an interest rate hike from the central bank, and we're not getting anything. We'll take it back. We'll take it back and say, well, since you're not giving us what we've just priced in for you, we're taking it back. That's the concept of pricing and repricing, which means the only point where you would be able to see a reprice of any move or a reprisal of any move in the market, it must be that you were aware of when the market was pricing a particular move. Which means if your information arsenal is not strong enough, it's really going to be difficult for you to be able to, see a reversal coming. It's not going to be directly straightforward, which means the information we have, determines if we would be able to tell if we're going to see a reprisal of moves, in the market. Take, for example, one of the major things that I said to people this money on the VTF, the virtual trading floor, is we saw a particular type of move for the US dollar since the beginning of the week, right? We saw weakness for the dollar. Weakness. So we saw strength, rather. We saw strength for the dollar in the beginning of the week. And you see a stronger US dollar pushing dollar up. And the story pushing this guy up was negative data. It's unheard of that negative data point will be propping up a dollar. In this case, the dollar had negative data in its own country, and dollar was one of the strongest currencies in the market, if not the strongest currencies in the market, against even other strong currencies, right? So we were seeing bad data for dollar, and dollar was strong. We already know that that's a disconnection. Disconnections like that, there would always be a natural reversals, which means in a case where a move happens that is against the natural status quo or the normal thing that we expect from that particular asset, it is natural for us to see that it's possible for us to get a reversal of that particular move. For example, if you look at this move on Euro USD right here, since the beginning of the week, the week started somewhere around 8. And look at since 8. This is 8 right here. Maybe this 8, 8. Okay, 8's also somewhere around here. So from like 8 at the beginning of the week, following NFP on Friday, we saw Euro USD rise. Now, this was a justified move. It was justified because NFP on Friday was bad. And a bad data print like that, right? It was bad. So clearly, the right direction to trade was dollar weakness. So we should be buying Euro USD. So we bought Euro USD on Monday. And naturally, all things equal, we should continue to buy Euro USD, considering that the dollar would continue to lose value. But look at what happened. The next 2 days, dollar became one of the strongest currencies in the market, and we saw Euro USD drop almost how many pips? We saw Euro USD drop almost 100 pips. And if you look at what happened here, weak USD based on NFP, right? Here, NFP did not turn positive. Let me tell you what happened. Negative job revisions for the US, negative PPI print, and yet all of this naturally should weaken the dollar. Naturally. But instead, we saw dollar trade as the strongest currency in the market. You see, beforehand, it was normal to see it that there was going to be a reversal. That at some point, this move cannot be sustained forever because it makes no sense that a currency seeing weak data, is suddenly some of the strongest currency in the market, and eventually, was seeing euro lose this much value against the dollar, right? And then yesterday, just one data point was released, negative jobless claim data or unemployment claims. Let me just write unemployment claims. Unemployment claims. And the dollar started losing value. So are we saying that the market did not know that USD had negative data all this while, and yet dollar was stronger than the euro? So how come yesterday, just one negative data point, the market remembered that, oh, euro is now supposed to be stronger than the dollar? No, listen, Sometimes moves might not be in line with what you're expecting. Sometimes moves might, not eventually be in confluence with market expectation and what you think should be, but still, it just means that for that period of time where market is not doing what you expect it to do, naturally there will be a reversal. So some of the things that causes reversal is when the market is repricing moves, number one, which is I talk about pricing and repricing. Number two, when there are moves that are not in line with natural processes, that is, when there are some moves that are not, exactly what they should be doing, those moves are subjected to some reversals as well. So reversals are not something that you just see like you just see coming. Your information arsenal will be one of the major things, that would contribute to if a reversal is going to come. And eventually, it just simply means that if all of this happened as a fluke, this market is naturally obligated, not obligated per se, but naturally we should see a reversal of this move, which means we don't expect to see any stringent movement of prices lower up until the market reverses this, because this is where the entire thing started from, like the entire weakness in the euro as against the dollar. So it means I still do expect that euro USD is still going to rise. I don't think it's going to fall. All things equal, except something else changes. I still think prices are going to rise. Why? Because I feel like there will be a complete reversal of this move, because this move is not justified. It came out of markets being just so volatile, on edge during the week, despite all of the negative data points we're seeing for the dollar. But now that the market is seemingly now on the prowl of trading the original direction for the dollar, which is weakness, it is normal for me to say, okay, market is still probably going to head higher, and we're going to look at some moves still continue up until we get here. And when we get here, we'll now start saying, okay, so what is the next thing to do? That's the case of reversal. So you see, reversals for us is not something that we do or something that we try to see coming and feel like maybe we should have known it was coming. If it's not something that you already have privilege to in terms of previous information or what caused the initial move that is going to be reversed, right? One thing I can teach you is this: if you're looking forward to trading the reversal of a move, the first thing to find out is what caused the initial move you think is going to be reversed. That's the first thing to do. Like, what exactly is the factor, the catalyst, the mover that actually pushed prices in this particular direction? Now, if you investigate that move and you feel like, oh, this is not justified, then you can expect a reversal. Or if you feel like this particular move is going to be repriced because of this also data or something, that's a thing. Or if you also feel like it's hitting some really strong level of support and resistance, which, by the way, strong levels of support and resistance are not enough justification for reversals. You know why? Because levels can always be broken. So the fact that levels can always be broken does not mean every single time I see price as a resistance, I will say it will reverse. Or if I see price as a support, I'm going to say it is going to reverse. No, it can go behind it. It can break it. So the major thing for us is what exactly, started the move that you think will be reversed? What is the major factor that is embedded into that initial move when you know that you know if you're to expect a reversal of the move or if you should stay with just corrections? Now, one of the major or one of the most popular tools in the market, the RSI, is a tool that people use sometimes to trade reversal, in the sense where, because of the way it is set up, in the place of overbought, in the place of oversold, as the case may be, right here, is people also use this to potentially trade, I don't want to say potentially trade reversals, but potentially take advantage of potential price swings, in the sense where the way this operates, it's simple. RSI comes with two major distribution, the overbought distribution, which is anything above 70, and the oversold condition, which is anything below 30, although this can be adjusted. In fact, I've met traders who like to adjust theirs to, I think, 80-20, so I don't know if this allows you to do that. Let me see. Indicator list, edit. Let me see if you're allowed to change the levels. Yes, you can. Yes, you can. Some like to use 20 here and use, what's it called? 80 here. Some do that, right? I think if you also want to add a description, this one is called oversold, and this one is called overbought, right? So, did it change? Yes, it changed. So you can see that you can now have the written word here oversold, they have written word here overbought, now placed at 80, now placed at 20. Some people like to use 80-20, but the natural default, what's it called? Concept that we know with the RSI is simply the 70-30. It's the most popular one, but I think in recent times people have started shifting, towards the 80-20 mark because RSI lags, right? In a sense where RSI is not perfect. RSI does not really lead price, it lags price. So it's possible that the market is already oversold and it's already picked up before you get the signal that you are supposed to, do what you need to do, to enter into that trade in the market. But yes, we have concepts like this, on the board for RSI being overbought, oversold. Overbought here means RSI is saying that there's likelihood for you to get an opportunity to sell, that prices will come back down. An overbought market opens up, the avenue for potential selling opportunity. And oversold here, now, but one of the major things is, by natural default, right? We buy when prices steps into oversold region on the RSI, and then we sell when prices naturally step into, the overbought region on the RSI. But one of the major things I need you to notice, trading RSI alone is probably not going to be, the best course of event for you, naturally, right? Naturally speaking, RSI trading alone, say you don't even know what's going on in the market, you have no idea about, what to do. You just go ahead, open a chart, pull up RSI and say, oh, because you're in overbought, I'm just going to sell you. Because you're in oversold, I'm just going to buy you. That's probably not the best case scenario. Yeah, it's not probably the best case scenario. In what sense? In the sense that one of the major things that you must understand is I already said it lags. And because it lags, people are looking for means to still make it efficient. Imagine now to the point where they're now tweaking the numbers. So we're now tweaking numbers just to make it efficient, in this particular case. So it's not going to be enough of its own. So one thing we will try to do is, okay, we will now first get information, right? We'll first get information and see how the RSI, can help us with that. For example, I do believe that with the Euro USD, there's room for a reversal in the sense where this particular move not justified, market needs to get it back, which means I do believe that prices will still continue to rise, right? Now, and I'm currently on RSI looking for, a return back here, and RSI is currently in the middle of the pack. And for a fact, right, RSI already peaked somewhere around here. If you look at this move here, it peaked here, which is this point here. And already price has returned lower as the market lost, the market lost all the juice, and eventually we saw prices pull lower, right? Which means we can also see this, on the RSI. Now, that means that there is still an opportunity for price to still step higher, right? And that means this can still happen in line with the expectation that we have that the market needs to recover, this particular move that is not justified by the market. And one thing I must also tell you is that with the RSI, some concepts are still valid. For example, the concept of support and resistance is still valid on the RSI, which means if you look at what I have on my screen right here, you could draw a trend line here. You can draw a trend line here. If you draw a trend line here on the RSI, you'd see that there's a support right here, right? Look at this. We saw this push right here, also this push again. Market came back lower, eventually dropped higher, this push lower. So which means naturally, even on the RSI, there's a key support here, which means there's still that strong affinity for price to still push higher on these guys, which means I can't still be confident of the fact that I expect that there will still be a complete reversal of this move that started on Tuesday. So I am not thinking just in the direction of, oh, RSI says if I'm down, I should buy. If I'm up, I should sell. No, there are other ways to which we can, use this guy that would make so much sense. There are other things to do with it. There are other analysis to do with it, in the market. Yeah, I mean, there's a support here. It's bouncing off this particular level. It could continue to bounce off, which means buying opportunity still remains intact on this particular guy. We'll take another example. We'll take another example. Take, for example, USD Now, USD completely rose also from 9th of September till yesterday, gave up some gains today. Price has gone back there again in the session today. Now a key level of support. But you see, one thing is clear. One thing is clear here is before we even consider what the RSI has to say, what story do we have about USD What's happening with this guy, right? What's the market opinion of this guy for you to be talking about if there's going to be a reversal of a move or not? Now, think about it. What do we know about USD for now in the market? I'm going to shrink my screen. And if you look at over time, it's been majorly up and down. Majorly up, down, like majorly up, down, like literally nothing separating them. Up and down, up and down, up and down, up and down, up, down, up, down, up, down, up, down, up. Then you're thinking maybe another down. Okay, maybe the market might, be willing to offer another downside, on this particular asset. And then you're wondering, okay, so what's the story? Like, what's the current story with this particular guy right now? And then you think about it, the dollar's point of view, or the dollar's point of view in terms of the market right now, for me, it's still weakness, but I understand that the current state of the market is still somewhat volatile. And today being, Wednesday, sorry, today being Friday means it's a little bit dicey as well. Looking forward to, a perfect market plan. But I still do think dollar remains a weak currency, right? I still do think dollar remains a weak currency. But in this particular case, there's no case for reversal. There's no big move anywhere, there's no straight line move anywhere, either up or down. So we don't really have a room to talk about where can we get a reversal. There's nothing in there. We don't go around looking for reversals of a move that we cannot justify or that does not have a story for us to, investigate and say, oh, market is going to reverse this move. There's no big move out of nowhere. For example, I remember one time, when we saw news in the media suggesting that President Trump had spoken to GOP members, in the US chamber saying he was considering firing Fred Powell. And I remember that instantly the gold market jumped almost 600 pips. Like the next 1 hour. And prices was tumbling higher. I mean, tumbling higher. And then at the time, asking if there's going to be a reversal is justified. You know why? It's recent information. There's a big move on the board. Something is happening. So you're wondering, should I enter this move or will this move reverse itself? That's justified. And I remember that immediately we saw that particular report, not long after, we saw Trump also confirm to the media that, well, he wasn't going to fire this guy. And guess what happened, guys? The market reversed all of those moves within the next 2 days. He didn't reverse it immediately. That day, I think he took half back that day. He used the next day to complete the reversal. Those are the kind of moves that you can talk about reversals on, not just random markets. A random market like this, I'll more or less be concerned about levels, current stories, anything that is standing out on this guy, per se. You're looking at this, you're looking at a key break of structure somewhere here. You're looking at the market go beyond the key level of resistance, right here. And then you're seeing something close here, and you're looking at this, and then it's likely that the market jumps up from this particular level. You're not thinking about a reversal on this particular one. You're wondering what is the next set of move, right? There's no reversal on this. If you're going to talk about a reversal, there must be a catalyst. Sorry, there must be a driver for a move that you've seen that is making you question if market is ready to offer a reversal. For example, like gold now, you can ask yourself if there will be a reversal. Because look at this. Straight line movement, now struggling here. So if you look at this, market has been going up for a while, starting to struggle. And one thing we know about struggles at high points is there's room for prices to come down, right? But the question you will ask yourself is, why do you think the market will be interested in reversing this move on gold? And in fact, look at the RSI. Look at the RSI even from the time this particular move started here. Look at it. It's been majorly up and down, majorly up, down, up, down. It hasn't been any strong overbought, oversold, which means even this guy will not give you a direct answer in terms of if you should buy or if you should sell directly. It means you're just going to be deceiving yourself if you're there wondering if you should reverse this move or if you can see a reversal coming. The most important thing for you at this particular point in time will be to ask the question, what exactly is moving this particular asset? And what is moving gold recently? Number one, dollar weakness. Dollar weakness. Number two, rising market uncertainties. Number three, increase in gold demand. Increase in central bank gold demand. Amongst others. So it means the only time that we're going to be expecting a reversal of the current move that we're seeing is, are we starting to see a strong US dollar? If a strong US dollar starts to come, then maybe we can talk about reversal, right? Are we starting to see, steady market conditions, no more market uncertainties, up and down? Is that what's happening? Are we starting to see a fall in CB gold demand? CB means central bank. So before you talk about the reversal of a move, you must ask yourself questions about what initially started it. If there is, fine. Then is opposite looking like something that is going to happen? If there is, good. If not, now it's no reversal. We trade continuations. I wish I can find, a market with a new story that has, something deep on it. But Friday, naturally, it will be difficult for us to find, a market with a deep story right now, fresh story. And then you're talking about a reversal. Okay, good. Look at, pounds AUD. Look at this stretch lower on pounds AUD in recent times. This literally started on probably 18th, 20th of August, right? Today being 11th of September, we've seen a stretch lower on pounds AUD. Stretch lower. So we're going to assume, I'm going to take it up a little bit. Yes, take it up a little bit. And then see that, this is H4 now. Such a big move lower here. What could have been the factor? Is it possible for us to have a reversal of this move buying? Well, let us look at what the FIB is, what the RSI is saying. And RSI actually followed this move one way or the other. You can see that if you extend this box lower right here, you can see it's a perfect confluence with this. Right? So yes, the market is down this much. We've stepped already into oversold territory already once, around this particular level. And then you think what to do. Is there going to be buying on, what's it called? A pounds AED back to the top? I mean, naturally, prices have already stepped into oversold region. So which means there's likely that the market returns back up, right? If you look at it over time, following every down has been up on the, what's it called? On the RSI itself. So we've always seen the market go up, go down. After every down, there's an up. After having down, there's an up like that. So it means, per the expectation of what we've seen over time, this being a key level of support as well, and this being a key level of resistance also as well on the top, right? We can't expect that the market will look to do this, which means pounds AED should look to recover, isn't it? But you have not answered the main question. You've not answered the main question. Why is the market selling pounds AUD? That's the question you need to ask yourself first. Like, why have we seen so much downside in pounds AUD? See, this is how many pips move. 662 pip move. It's not a joke. It's not a joke. It really isn't a joke. So we can try our best, investigate what has happened. With this particular asset. Let's go. Let's just do this briefly. I have some time. We're going to check what exactly has happened with pounds AUD for a short period of time. Let's just see. Let's see since August 18th. We're going to filter these to AUD and just pounds, right? We're then going to leave only high impact event. We're going to change the date from August the 18th or thereabout to September today, which is 12th. And we're going to apply settings and see what has happened between these two guys. I didn't see, I don't want to see USD now. Come on. Oh, I want to see only AUD and pounds, please. Apply filter. All right. We saw higher than expected inflation print for the UK Wednesday 20th. But then the next day, we saw lower than expected PMI print, although one was also positive. That's like a mixed report right there. AUD CPI was higher than expected at 2.8%, August 27 versus 2.3%, which is actually good for the RBA. Also had positive GDP print for Australian dollar by on Wednesday, something about the third, 0.6 versus 0.5 expected. Also, previous was 0.3, which is really good, over time. So clearly, we've seen less information from the UK and probably more from the AUD in recent times. And that of the AUD has been positive for a while. Also, when you look at the central bank point of view, the RBA recently has gone back to holding interest rates, despite cutting interest rate the last, meeting. For the UK, the UK's last BOE meeting was also a solid one, but we did not see the pounds bear, the fruit of that particular move because not long after we saw some economic turmoil for the US, for the UK, right? We know that the UK is currently going through some economic uncertainties, even some political uncertainties. There was a time, sometimes I think last week or 2 weeks ago, we saw this massive move in the UK bonds market, suggesting that investors had lost confidence in the economy at the time. So that's one of the major things affecting the pound and then propping up the AUD in the market. So given what I've just said, will I now go back to my chart and start expecting a reversal? The answer is no, because I know that there's something wrong with the UK. The bonds market is saying there's something wrong. The economic data in recent time has been a blackout. We've not seen anything this serious from the UK. So which means the market opinion of the pounds is still in still in that environment of the UK right now, nothing to you get. So I cannot sit here now and say just because of the RSI pulling higher, I just think there's going to be a reversal. The market will need a factor to feed into the reversal. And let's check what next week holds for us. Let's see what the next week holds for us in terms of data for these two assets. So let's see next week. Next week. Next week, well, we have CPI for the UK Wednesday, September 17th. And then we also have the BOE monetary policy meeting next week, also Thursday, September the 18th. There's also information for the AUD, but just one, which is also on Thursday, which is September 18 as well. If there is going to be a reversal in that move on pounds AUD, it must be that the economic data prints of this week is going to put some confidence back in the investor's mind when it comes to the UK's economy. You can see, because I said one of the major things weakening the pounds is because investors have lost confidence. It will take data to restore the confidence to then think about the market potentially reversing that move. You can see. So we're not talking about reversals based on what we feel or reversals based on, what the chart is saying. Yes, the chart is saying potentially RSI is saying jumping off, oversold territory, potentially prices could head up, but price will need the right catalyst to counter what is currently driving the initial move. Price will need that catalyst. And that's one of the key takeaways that I need you to have in the session today, guys. That, we don't want to look out for reversals just because we think we can. We look out for reversals when we have seen changes to stories moving a particular asset in one current direction. So maybe, for example, you have been trading a particular asset in a particular direction, and then out of nowhere, you see a new story. It is okay to trade the reversal. You can look out for confirmations of the RSI as well. That works. That works. Are we together? So it is key that we don't throw away, the element of understanding that reversals are not something that we can see coming as a maybe a Gandhi or something, or a seer that can see into the future, but it is, an opinion that you can induce if you have the right information arsenal. If you understand what has been moving the market before now, or you have information regarding how the market has been moving before now, if there's anything changing or challenging that, then you can understand that there's possibilities for us having potential reversals in the market. If you have a question before we close out the session today, please put your question in the Q&A. I'm going to attend to them right now, and then we can look to close out the current session. Please send in your questions. Please send in questions if you have any, and then we can look to close out the session this afternoon. All right, I have a question here. Well, we're most likely going to be teaching the MACD as a different concept. All right. I'm not entirely the fan of using MACD for potential price reversals. More or less, we use MACD if we're looking forward to, seeing any switches in market conditions, for example, because MACD has a signal line, and then we have that, histogram in between that also either pushes above or below the signal line. So that one for me is a tool that I especially like when it comes to, the place of potential, continuations in moves, especially when I have big moves on the board. And scanning through the market right now, I can't find anything really that I require my attention on, the MACD. So we're still going to do the MACD itself on what's it called on its own, in terms of how it can really apply and how we can use that as well for trading opportunities in the market. Can you use zigzag indicator? Oh, well, zigzag indicator, yes, you can use it, but that's if you see, an interesting market with some key elements of interaction between, key levels of support and resistance, right? So yes, it could work. It could. But you want to also avoid combining too many indicators as well. Probably not the best thing to do. Fractals. Fractals is just price action. Fractals is just to point out, key elements of places where we have, price action on the board. I think it's under Bill Williams. Yes, it's not really. If you look at all of this, if you put up a fractal on your screen, it's not really to do anything apart from show you where you have key price actions on the board, key elements of support and resistance. So you still have to define the objective of what you need a fractal to do. If you just wanted to point out key levels, why not? You can point that out. But fractals are not for reversals. No, 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 they are not for. They are just to help you with, where we have key elements of price actions, on the board in the market. So fractals necessarily are not, made for reversals. It's not like maybe that's what they do. Okay. All right. So thank you, ladies and gentlemen, for the session today. It was great talking to you guys about this particular topic. We're going to see you on Monday on the virtual trading floor. Please enjoy the rest of your afternoon and bye for now.